I use Claude to create 5 different dashboards for me to help me analyze which stocks to buy. In today's video, we'll place 4 different types of trades. Using the ETF and the sector tab from Claude Output, the first type of trade we'll do is we'll place a trade in a post-tax account like a brokerage for ETFs and sectors for tax efficiency. Using the Risers tab from Claude Output, we'll place a trade in a pre-tax account like a 401k for stock trades. The next type of trade we'll do today is the short lows. So using the short lows tab from Claude Output, we'll place a short sale for those stocks that we think are going down. And the last type of trade we'll do is using my sectors, which is comparing the stocks that I own compared to the sectors to rebalance the portfolio. Looking at the recommended sectors tab, let's take a look at XLV and XLF, which are 2 sectors that are rising. I'm going to skip going through Schwab.com because we already know that these sectors are rising. It's pretty simple for ETFs that we just go ahead and place the trade on the ETF. Okay, I type XLV here in Thinkorswim. The first part of the chart here is usually just for my informational so I can see what the trend line is from the inception of the stock till today. But it's this bottom chart that I'm more interested in, which is a 3-month trend of the stock. So the Christmas tree is the actual stock, and these are the indexes that I put on my chart. So this is the NASDAQ, the S&P, the Russell, and the Dow. But we can see here it's trending up, so I'm going to go ahead and place a buy order. Before I buy the stock, I'll take a look at the price of the stock and whether the stock today is up or down. So today the stock is up 2.63, so I'll buy a little, and then on a down day, I'll buy more. So let's go ahead and use one of my templates here. So I want to buy 22 shares of this stock at market, which means now, today, as soon as this order is placed. I have a second order here that says sell 22 shares of this stock at a trail. And my trail right now on this template is 25. So if the stock I'm buying today is $10 and it goes up 20, 30, 40, up to 100, at 100, let's say it starts to drop 25%. Then I'm out at $75. So at $75, I'm out. I don't let it drop all the way back down to 0. So it guarantees that I've made some profit and I've minimized my loss. I have a third order here that says as soon as I buy it, let's pretend again at $10, at a 10% drop, as soon as I buy it, I'm also out. So if I bought this stock for $10, it drops 10% or $1, I'm out at $9. So I've minimized my loss. I never ever place a trade without putting in my trails. I find that trails are one of the biggest ways to save money and minimize your loss. Now, there are a lot of people who aren't fans of trails. They say it makes you exit too early. Well, if you feel that way, then put a 50% trail, right? So that way you can gauge when the stock is dropping, when you want to get out, but at least have some sort of safety net, whether it's 25%, 30, 50, but I have seen accounts with a 99% loss. Had that person just put a 50% trail, he could at least monitored as the stock was going down and then decided manually to get out. But never let your stocks drop more than 99%. I mean, that's just ridiculous. So I'm going to go ahead and confirm and send and place this order. So again, buy 22 shares at market, sell 22 shares with a 25% trail stop, sell 22 shares at a 10% stop. Looks good to me. I'm going to go ahead and click send. And here's my order. Okay, let's do the same thing under ETFs. We see that QQQ and SCHA are the 2 ETFs that are returning higher than some of these other ones, such as international small cap. So I'm going to go ahead and so after I've diversified, which means I have some money in all of these ETFs for diversification, the exercise today is I have some extra money. So I'm going to front load my extra money in the higher return ETFs and not so much on the lower return. But I want to be clear, diversifying your money across all of these different ETFs or sectors is important. That is, put some of your money in US small, some in US large, some in US mid, some in broad, some in large cap, some in international, some in REITs or real estate investment trusts, some in emerging markets. I know some people that say I'm only going to invest in the USA. Well, in 2025, international returned better than US stocks. So diversification is key. So now I'm going to put some money in QQQ and SCHA. Going back to Thinkorswim, I'm going to type in QQQ here. I've already bought some in the past, and we can see that QQQ today is down 1.73. So in this instance, I might buy more than my template, which is 22 shares. So I might buy more. So I'm going to go ahead and do, for instance, 35. I'm going to change all these 35. So again, that way I buy 35. I also sell 35 if it starts to drop 25%. Confirm and send. Again, just 35, 35, 35. Make sure that your final confirmation is exactly what you want. There have been times where I've typed in 35 and this was left at 22 or vice versa. So just confirm one last time that this looks okay. Confirm and send. The third type of trade I'm going to do today is taking the output from Claude under risers with the number of stars and place that trade. In a prior video, I explained how I created this dashboard, which is asking Claude to look at the 52-week high and any stock that is consistently shown to be a 52-week high day over day, add the number of stars. That way I can take a look at which stock are momentum trades and put some of my money in those trades. So I've sorted here by year to date, because again, if I'm not beating the S&P, just buy the S&P. So here I can see some stocks are returning 500, 400, 300%, but I'm more interested in the number of stars. So ATEX has been on the highs list for 5 straight days, and it's returning 381%. Today, it looks like the stock is down. So this is a great time to buy or buy more. So let's go into Schwab. This I'm going to go into Schwab.com and just confirm that ATEX is a good stock to buy. So again, on Schwab.com, I went to research stocks, return to legacy view. That is the key. ATEX. Right, here's ATEX. Again, I like Schwab because it auto adds the index and the sector that this is compared against. So ATEX is compared against the S&P and IYZ. So we can see that over time, it hasn't beaten either the index or the sector, but look at this trajectory. It is going up. We can also confirm that 1 year it's returned 319, 3 years 231, 5 years 76. So far it looks good, but now let's take a look in more detail on the 1 year by scrolling down. So we're at the price performance comparison chart. Again, I only found that Schwab has this. I'm a big fan of Schwab. I find that the interface is intuitive. It's easy to use. It doesn't leave me digging for data. I've used E-Trade, Vanguard, Fidelity, you name it. Some of them aren't very good. I've used other smaller companies, and I just went ahead and stuck with Schwab because I find that it's just the easiest interface to use and provides me the data that I need. So price performance comparison, ATEX, 1 month returning 54%, S&P negative 1.33. 6 months returning 381, S&P returning 9, 1 year returning 319, S&P returning 20. So in my book, this is a definite buy. So let's go ahead and go to Thinkorswim and buy this stock. I'm toggling now to a 401k type account because for stock trades, it's more tax efficient to buy individual stocks in a 401k type account and buying ETFs in a post-tax account. So here's ATEX. Definitely trajectories going up here. Let's go ahead and buy it. It's also down 2.83. So I'm going to buy more than I normally buy because it's down. Right click, buy 22, good enough, confirm and send 2000. Yes, because it's down, I'm going to go ahead and buy it again, but this time with a different buy in the sense that the first order I did was 25% trail, but I want to buy more, and this time I'll use a 20% trail. And because it's down and it's returning so high, I'm going to place one more order, this time at an 18% trail. That way, if this stock is going down, then I'm out, captured the gains. But if it jumps back up, I'm not out all of my shares. I'm only out some, and that way I'm sort of laddering in and laddering out. So 80% trail, right? So that's how I would use this output from Claude on risers. So taking a look at year to date, taking a look at only buying those ones that have the highest stars, which is 5-day return so far. Now let's do short sale. Before we get into short sale, let me explain my logic. When we buy a stock, there's only one direction where we can make money, which is we buy a stock and we hope that it goes up. But there's another way to make money. This is extremely risky. It is not for everybody. Just look at what happened to GameStop. But you can also make money when stocks go down. There's a number of ways to do this. You can do a short sale, you can buy put option, etc. You can buy ETFs at hedge. But for me, I use short sales because there's no time expiration. If all of that seems confusing, don't worry. And also don't do it. Short sales are extremely risky, but this is a way for me to make money both when stocks rise and when stocks drop. So I asked Claude to do the exact same thing, which is give me the number of days where a stock has fallen. So for instance, there are day one, it returned 1 star because obviously that was the first day of the run. Today is the second day of the run. So for instance, I ran this on July 2nd and July 1st. So ABTC has been dropping for 2 straight days. So this is an indication for me that maybe I might want to short this stock. So let's take a look in Thinkorswim and look at how the stock is doing. ABTC. So here's ABTC. I can see for 3 months, it's definitely dropped. So I'm going to go ahead and short this stock. And again, it's dropped 10% in 1 day. Pretty good for a short. You can go ahead and now use a different template, which is sell. So I have here sell, short sale. So my template here says sell. That is, I don't own this stock. I'm going to sell it now at market and then rebuy it even lower. So I'm going to capitalize on the difference of the short. But I also have a risk management plan in place where I want to buy it back if it were ever to jump back up. So I'm going to short this stock, but I'm also going to buy it back and protect myself in case it jumps up too high. Because remember, on a short, your gains are limited to this stock dropping to 0, but your losses are infinite, right? That stock that you bought for $10 could jump up to 1,000, 2,000, 3,000, etc. So I want to cap how high the stock can rise before I'm out. So for me, I'm giving it a 10% rise. I've actually been thinking about changes to 5%. So let's go ahead and place this short order. Confirm and send. It's the exact opposite of what I did when I bought the stock. Now I'm short selling. This is a screenshot of my short sale account. And I wanted to take a screenshot because some of these I closed the position end of day because it's a long holiday and I didn't want this to run overnight. So just give you an example, I shorted AEHR. So that's where you see the -10. And in about 10 minutes, I made a 13% profit. So end of day, I went ahead and closed out this position. ATXI, I shorted this, also just 10 shares. I made 10% profit, again, in a very short amount of time. And I went ahead and closed this position. So this is just an example of how you can take advantage of a down market as well as an up market and make money in both down markets and up market. Last thing we'll do today is place trade orders by looking at where the sectors are returning high, where my stocks are, and then rebalancing that. So as we saw earlier, I've used Claude to create the graphs, which tells me which sectors are returning higher than others or ETFs. But I've also connected this to my Schwab account to help me rebalance my portfolio to move money where sectors aren't returning well and then rebalance that into areas where sectors are returning well. So the 3 sectors that aren't returning well, utilities, communication services, and energy. And it looks like I have some money in communication services and energy. So let's take a look at those 2 areas. When I scroll down in communication services, I have about 16 tickers or 16 stocks in this area. So I'm going to expand out this column and determine which ones I need to sell. So when I expand this out, I see AMX has a loss and GSAT has a loss. So before I sell these blindly, I'm going to go into Schwab.com and just confirm if these stocks are going up or down, whether I should sell it or not. Now, one thing to note is under communication services, Google is listed. I want to keep Google. We can see that it's returning positive. So just because it's showing up in a sector or an index that isn't doing well, do your due diligence and take a look at the actual ticker before you take action. Let's take a look at AMX. Okay, AMX is returning 46%, which isn't bad. It's not negative. But if I take a look at the sector return, 32% for technology, I mean, it's just a 10% gain. And when we saw with the risers, we can actually take that money and put it where it will return more money. So at a 40% gain, it's not enough for me to want to keep that stock. So I'm going to go ahead and sell it. Because I connected Claude to Schwab, I can see which account holds this stock. Now, this wouldn't be a problem for most people, but I have about 15 accounts with Schwab. So for Claude to identify which account holds the stock has been a big time saver for me. I'm going to go into the account that holds the stock and place a sell order, but a very specific one. So watch how I do it. All right, here's AMX. We can see for the 3-month chart here, it's actually been pretty down. Instead of buying this stock, I probably should have short sold it, but that's okay. So again, I never buy a stock or sell a stock without a trail. And that's what this little red sticker or badge is this was a trail that was set when I bought the stock. So I'm going to go ahead and X out this badge and create a new one or a new trail because I want to go ahead and sell it. Now, what I was saying is I never just sell market order. Why? Because we can see that today the stock is actually up 0.43%. Well, I want to give this stock one last chance in case it goes up, but I also don't want to lose any more money on this. So what I do is I set a 1% trail. That gives the stock at any point a chance to go up, 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 up. And at that high, when it drops 1%, then I'm out. So I'm guaranteed to capture any more profits before I sell this stock. So using my template, right click, sell, and I have one here, sell at 1% trail. So I own about 99 shares, change this to 99, sell 99 at a 1% trail, and it's good to cancel. So that means about 180 days, this order will be live, and I only have to check my accounts every 6 months to reset my trails. So this allows the stock to go up as much as it wants for 180 days. And in that 180 days, if it keeps going up, then nothing happens. But in that 180 days, if it ever drops 1% more than where it is today, then I'm out. So I've captured some gains, minimized my loss. Confirm and send. Sell 99 shares at a 1% trail stop, good to cancel. Looks good to me. Just to recap, I used Claude to create 5 different dashboards for me, and I connected this to my Schwab account to help me rebalance. My sectors are those sectors and where I stand against those sectors. Recommended sectors are the trend of the sectors going up. ETFs are your diversification and which of those ETFs are performing better than others. Risers are those stocks that have consistently shown momentum on the uptrend, and shorts are those stocks that have consistently trended down so that I can short the stock and make money whether stocks go up or stocks go down.